Today, the Nasdaq composite reached a new all-time high, rising 0.56% to close at 18,518.61, driven by gains in major tech stocks like Nvidia, Meta, Amazon, and Microsoft. The S&P 500 edged slightly lower, finishing at 5,808.12, while the Dow Jones Industrial Average fell by 259.96 points, or 0.61%, to 42,114.40. Rising Treasury yields continue to impact market sentiment, with the 10-year Treasury yield hovering around 4.24%. Despite the strong performance of tech stocks, the broader market has been weighed down by rising interest rates and mixed earnings reports. Companies like HCA Healthcare and Colgate-Palmolive saw significant losses, while Tesla's surge earlier in the week helped lift market sentiment. Why this matters for the average person. The stock market's performance isn't just numbers on a screen, it directly affects everyone's financial well-being. If you have a 401k, an IRA, or a retirement fund, today's market movements determine the value of those accounts. Additionally, rising Treasury yields lead to higher interest rates on loans, mortgages, and credit cards, which can increase the cost of borrowing for everyday consumers. Knowing how the stock market moves helps the average person plan for their financial future. When tech stocks rise, it can be a sign of optimism, but rising interest rates signal caution, meaning higher costs of living, borrowing, and financial stress for many. Today, the Nasdaq hit an all-time high, but what does that mean for you? Whether you're actively investing or just trying to manage your money, the stock market plays a bigger role in your life than you might think. In this video, we'll break down today's market moves and explain how they affect your savings, loans, and even the cost of living. The Nasdaq surged to a record high today, closing up 0.56% at 18,518.61, led by tech giants like Nvidia, Meta, and Amazon. Meanwhile, the S&P 500 inched slightly lower, and the Dow Jones dropped over 259 points, marking its fourth consecutive losing day. But why does this matter? Well, these numbers influence the value of your retirement accounts and could impact the interest rates you pay on loans. Let's dive deeper into what's really going on. So why are tech stocks doing so well? Companies like Nvidia, Amazon, and Microsoft are thriving due to strong earnings reports and optimistic outlooks for future growth. Investors see these companies as safe bets, especially with more demand for technology in our day-to-day lives. While tech stocks are booming, rising Treasury yields are creating a different story for the broader market. The 10-year Treasury yield climbed to 4.24% today, and that's bad news for anyone with a loan or a mortgage. Higher yields mean banks will raise interest rates, making it more expensive to borrow money. This can have a direct impact on your budget. If you're thinking of buying a home, refinancing, or using a credit card, higher rates could mean paying more each month. If you have a 401k or an IRA, today's market movements can influence the value of your retirement savings. Tech stocks doing well might boost your portfolio, but rising interest rates can also cause uncertainty